Hello traders, my name is Logan with Funding Talent, and in this video, we're going to be doing our market forecast for the first week of August. I hope that you guys had a great month in this last month. I know we did on the market forecast. We had a spectacular month actually, and I hope a lot of you guys capitalized. In this video series, what we do is we pull the best fundamental drivers that we are currently keeping our eye on in this upcoming week, that we are going to stay away from possibly, and also the best technical setups that we're currently eyeing up and that we're trying to act on in the upcoming week as well. So hopefully you can pull some technical setups out of this video and fundamental drivers to stay away from. So without any further delay, let's get right into the video. Hello traders, and here we are, as always, on our slideshow. And to get started with this week, we have a bunch of news events actually. So starting on Monday, we have some 10 a.m. news for the USD. Tuesday, 12:30 a.m. and 6:45 p.m. news for the Australian dollar and the New Zealand dollar. Wednesday, 8:15, 10 a.m. and 10:30 USD news, as well as 7 a.m. on Thursday, a lot of GBP news, and then 7 p.m. on Thursday, more Australian dollar news. And then it is NFP week, so on Friday we have our GBP news at 7:15, and at 8:30 a.m. we have NFP, employment change, and Canadian dollar news. So for this week, mainly stay away from early morning Thursday and Friday, and the rest of the couple of days will be fine. But just make sure that we are tightening up our stop losses and being extra careful on Friday, because we know how easy it is to get burned on NFP. So, personal consumption in the U.S. surged 1% in June of 2021 as consumers shifted spending to service sector industries such as restaurants and travel. We talked a little bit about this last week. According to a survey, OPEC oil output increased by 610,000 barrels per day in July to 26.72 million barrels per day, which is the highest it has been since April of 2020. What this means is we might see a pullback in oil. When there's less oil, the price of it goes up, right? This is basic supply and demand. But when there's more oil being produced, the price of it is most likely going to come lower. So because so much oil is being produced, multitudes higher than what was being produced last month even, we can definitely expect the prices to start to come down. The S&P, on other news, strengthened by a smaller amount after the consumer spending month over month was released, which we were just talking about. So for this, very good news, and this will tie into our risk on market sentiment. For anybody who is newer to the channel and newer to the video series, we break down every week into a market sentiment. And what market sentiment means is if expectations are higher for further economic growth, or if they are lower, which means are people excited for what's coming in the economy, or are they scared? In this week, and how we have been for the last couple of months, we're keeping with a risk on market sentiment because there's still good news in the market. There's not a lot of bad news right now. So as I was just saying, a risk on market sentiment means expectations are higher for further economic growth. And for our currency traders, what that means is we can expect the New Zealand dollar, the Canadian dollar, the Australian dollar, the euro, and the pound to appreciate. As well as for our indices traders, that means that we can expect indices globally to appreciate as well if we see a continuation of this risk on market sentiment into the new week. So there's not too much that I wanted to show you guys this week in terms of technical setups because there's just not a lot of exciting things right now. And I think that's something that not a lot of traders understand, which I was actually having a conversation with a fellow trader about the other day. Not every day is a trading day. I know a lot of us trade on lower time frames. I know I do, and a lot of our traders do at Funding Talent. That doesn't necessarily mean that we need to be taking trades every day. And in the case of higher time frame trades, sometimes you're not even taking a trade for a week. There are some weeks I go where I don't trade at all. And what that means is that we're keeping up with our trade selection. And not trading is an active trading decision. Remember, the number one rule is to protect our lifeblood, our capital, our assets. If we are taking subpar trades and entering subpar trades that have a lower win rate, then we're putting ourselves at a risk for loss. And while we're always putting ourselves at a risk for loss, what we're trying to do is increase our probability against that. We're trying to increase our probability of winning. That's why I always preach to wait for the best trades and then don't take a trade if you're seeing subpar trades. So that ties into not seeing a whole bunch of setups this week, and we'll see if there's something we can act on. But if there's not, then there's not. We go into the next week refreshed and ready to go. So what I did notice from last week was we called for a XAUUSD long, which worked out pretty well. Not as well as I thought it would, as we got some pullback today on Friday. But we did consolidate for a little bit around this level and then start to move higher. I do think that we started a 5-wave advance, which I touched on last week. But what that is an Elliott wave 5-wave move, which pretty much just means that we're going to move long impulsively, very fast. And the 5-wave moves are breaking down, as you could probably guess, into 5 waves. Wave 3 is the biggest of the 5 waves. And right now we finished wave 1 and wave 2, and now we're in wave 3.
something that we talked about before, which I'm not going to go too deep on, is in wave 3, we have our own 5 waves. So what we could be saying right now is wave 1, wave 2, wave 3, wave 4, and wave 5 to complete wave 3. And that's why we're looking on a larger time frame, and then it drops down to a lower time frame. So I still am holding my long bias for gold. Here was silver. I said if we break out of this consolidation and break this lower support line, we could be going lower on silver. And as you can see, that did work out for a good bit of the week, and then we had a pretty strong rally within the last 2 days, and we're currently bouncing around that same level at that consolidation. But what we could expect is this consolidation, as it was acting as consolidation, to now act as resistance as we broke below. And as you can see, we had this nice little wick right here, in which we saw this work out. So what we're looking for here, I'm still going to hold my bias short on silver. US 30, we had a fantastic move when we called the short opportunity out the other week, but since then we've had a very strong rally and more of a consolidation. Right now, what I'm looking for is, in lack of better terms, it could go both ways really, but what I'm looking for is a breakout of this consolidation that we're in now. And what we can see after this is we could see another move down after we have our, this will be our 4th touch to the resistance line. And if we go to the daily, we can see we got our 3 touches to the divergence line, which is what I was talking to you guys about. So this is a very, very important moment for our US 30. What I'm hoping for now is a move lower, because 3 waves off the divergence followed by a strong, initial push. Once we get a strong candle close, then I will be firm on my bias short. But until that happens, if we're bouncing around this level in this consolidation, then really it could go either way. We could break this divergence line, break up, come up, retest, and then move off. That's totally possible. But if we get a breakout lower of this consolidation right here, I'm going to be pretty confident in a move lower. Here we go on to USDJPY. So we're in this wedge right now that we formed, and I'm not really too set on anything, but I do see that this support level right here is holding pretty strong, and I want to see us keep this level. So if we could get a couple more bounces off of this level, even if we're bouncing up right here, and we bounce off this level, move off higher, and then break out of here, and maybe even get a retest like this and then move higher, that would be ideal. This would be perfect. But as you can see right now, we're looking at probably, I want to say 38.2. So yeah, we're looking around a 50 level right now, retracement of this last wave, which means we're in our retracement zone. For anybody who's not seen our last couple of market forecasts, this is how we draw our retracement zone, the 38.2 to the 61.8 Fibonacci retracement of the prior wave. And that's what we have as our reversal zone. So we are in our reversal zone right now, which means this is another confluence for us heading higher. I do expect us to bounce around a little bit, but then move higher out of this wedge. So this is DXY. We actually called this out last week, and it worked out very, very well so far. And I'm going to keep my bias maintained on bearish on this pair. The only thing that I'm kind of keeping my eye on is, well, obviously this fractal that we're in right now, but also this other fractal that we have to break beneath before we can really say that I'm confident in moving much lower. But in the meantime, I am confident in a short to medium term move lower on DXY. We've been waiting because we had this really very weird looking bullish move out of nowhere after we have been moving lower pretty consistently on the DXY. So I do not think that we're going to sustain this uptrend for too much longer. So we called out this trade last week, which was EURUSD, and I actually still think that this worked out fantastic. I really hope you guys caught this trade. But I do think that we could probably see a pullback in the near future. So this would be wave A, this would be wave B, and then this will be wave C. So in the 5-wave Elliott wave move, as you can see, it's a 5-wave impulse move followed by a 3-wave corrective pattern, which is an ABC type corrective pattern. So as you can see, what we can kind of see here is the formation of this. So wave A is completed. Now we're looking for wave B and then wave C. And what we can look for is a retracement zone around here. And if we can get into that retracement zone, drop down to a lower time frame, maybe a 1 hour, and then find a price pattern, that would be even better, and that would be confluence. But I am going to still hold my bias long for the medium term on EURUSD once we get a consolidation and a little bit more price movement around this level, and then we continue to move higher. On CADJPY, I actually really like this. We might consider this the chart of the week, but we finished that ABC correction I was just talking about. As you can see, wave A, wave B, and then wave C. And right now we're starting a lower time frame 5-wave impulse move. So we had wave 1 complete, wave 2 complete, and now we're forming wave 3. As confluence for this trade, we do have a head and shoulders. Inverse head and shoulders to be specific. Head and shoulders are reversal patterns. So if you see a head and shoulders on a high, that means that we're reversing and moving lower. But if you see a head and shoulders on a low, that means that we are moving higher because it's a reversal pattern of the prior trend. So as you can see, we're moving lower, and a reversal of this downtrend will be an uptrend. So my bias is going to be long, and this will be my chart of the week on CADJPY.
So traders, that was again our market forecast for the first week of August. I really hope you guys enjoyed and pulled some insight out of this video in terms of the technical setups and the fundamental drivers. And I hope you guys stay aware at NFP on this upcoming Friday. And if you enjoyed this video, all that we ask is that you follow us on all of our social media platforms, because we're releasing new content across all of our various platforms every single day, and we hope to deliver value to you on those as well. If you're not already subscribed to the YouTube channel, be sure to do that so you're caught up with these videos. And as always, on behalf of everyone at Funding Talent, happy trading.